Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. So guys, as financial market have got some relief from the United States government, they gradually returns to their own, and on the previous week, especially at the end of the week, we have seen this significant appreciation in across the board on the gold market, on the euro currency. Well, in short-term perspective, market has rather significant potential to the upside, and I think that at least theoretically and at least how it stands right now, well, I think that it's around 200-250 pips of the cloudless action to the upside still possible on the euro currency. But if you will take a look at the a bit medium-term perspective, that's in this case the things are not as cloudless as they desired to be, especially because we do not forget that the debt sale and the budget, the shutdown of the government was just at the beginning of the month. But we also have the end of the month when we will get the Federal Reserve FOMC meeting, right on the 13th of October. Also, we still do not have the non-farm payrolls release for previous month. Unfortunately, guys, I do not know when it will be released, but probably it still has chances to be released on the October. And if you would like to know the details of my warnings about the upward continuation and the long-term perspective on the gold, on the euro currency, you could read our analysis of the monthly time frame on the weekly time frame, because this is the daily video. It's a bit beyond the scope of this video. But in general, I see some signs on the other pairs, particularly speaking on the Japanese yen, on the Great British Pound, that points on that upward action has the risk to end around the yearly pivot resistance 1 on the euro currency. Because the patterns that now are forming on the Great British Pound, on the Japanese yen, suggests that better to say not to suggest, but cares some risks of for upward continuation on the euro currency. Other speaking, the risks for dollar depreciation. So that situation could really turns opposite. But this a bit longer term perspective, and on the coming week still market has the room to continue move to the upside, and we will focus on it. On the daily time frame, we do not see any patterns, but we see that market has hit our resistance. That was our target. That's monthly pivot resistance 1 and 127 extension of that swing down. So logically to suggest that some retracement could happen here that we should use to take the long position. And daily time frame led us to clarify how deep this retracement could be. First of all, take a note that market in fact stands not at our bot. So our bot level stands at 137.62 approximately. So in here is almost the 100 pips to the upside. Is free space for this for the market. So our bot is not pressing now on the prices. This resistance is not very tremendous, not very strong, because that, yes, that is the yearly pivot, monthly pivot resistance 1, but that's not some, say, ABCD completement target right at the confluence resistance on the daily time frame or confluence resistance on the weekly time frame. We have no significant fib levels around that area. Besides, if you'll take a look at the weekly time frame, you'll see that previous swing high stands just 7 pips higher than current swing high, and hardly market will left them behind. Well, that's why this overall situation on the daily time frame suggests that retracement should happen, because market at a resistance, but this retracement at the same time should not be too deep. What does it mean, too deep retracement? for this picture, the deep retracement will be retracement to this confluence support. It's 134.70 area approximately, because market hasn't completed the retracement to this area when the head and shoulders pattern was forming. Market hasn't retested this swing high, hasn't touched the monthly pivot point by this pattern. It just has ignored it and continue move to the upside. And as market has taken out of these highs, and if bullish power is really exists now, the market dominates over market, hardly market will show this retracement right now. Besides, if this will happen, it will erase all swing to the upside. That in fact will put under question the further appreciation and could lead, for instance, to the greater head and shoulders, because this pattern could become the left shoulder, that could become the head. Okay, you understand what I'm talking about. If market will show the too deep retracement. Hence, if market really intends to continue move to the upside, there are only two levels that are acceptable for us as the target of the potential retracement down. The first level is 136.15, that is also the previous swing high. The second level is 135.60 area, that is the confluence support here. So that is two levels that we will be watching for potential entry on the long side of the market. On the 4-hour time frame chart, we see other details that are significant for us. First of all, the 136.15 area coincides with the weekly pivot point for the coming week. It's around 136.20. And take a look, that is also the previous swing high that has been broken by the market. So that's really significant level. As guys, you have asked me to show you the 4-hour time frame overbought oversold levels. So here you can see that this level will be simultaneously the level of 4-hour oversold condition. What does it mean for us? It means this is in fact very valuable add-on to our trading plan, because the combination of these support areas, including the oversold condition. So take a look how market reacts at the hitting of the oversold. You can hear it, you can see it. Means that if even market will not reestablish upward action right from this level, it will at minimum bounce from it to the upside. And it means that if we would like if we would like to take the long position, at least some part of this position should be taken at this level, because currently we do not know whether market will test this level and just continue move higher, or it will test this level, shows the minor bounce, and will continue move to the downside by the compounding retracement, some sort of the ABCD action, right to the 135.60 daily confluence support. We do not know it in advance, but what we do know is that market will bounce from this level at minimum, or even will continue move high. That's why we should keep an eye on this level and should take at least some part of this position here. Well, on the hourly time frame chart, I do not see much to add. In fact, all that I see is that, take a look, that is our butterfly. It has worked perfectly. Market has hit the target, and take a look, market simultaneously has formed here the small bearish stop grabber. This pattern suggests at minimum the taking out of these lows around 136.60 area. The ultimate target of the butterfly to the downside stands around 136.25 approximately, so very close to the 136.15. Okay, well, this is not very impressive patterns, not very impressive price action, but still this gives a bit more confidence that market should reach at least 136.15 area. At least it has chances to do it, especially if this grabber will work. Market will break this support area, 136.60. In this case, the chances exist that market will proceed lower to the first fib support. So that is in fact our trading plan. Since market stands at the resistance on the daily time frame, some retracement should happen, but this retracement should be not too deep. There are two levels to watch for: 36.15, 35.60 area. Small part of the position should be taken right here, because market, this is really significant support, and market could continue move to the upside right from this level. We can't exclude this possibility. If this will not happen and market will show just some bounce from it, that bounce will probably become the BC leg of some greater ABCD move to the downside. In this case, major level to watch for will be daily confluence around 135.60 area. There are two moments that we do not want to see here. Since we suggest that the bullish power is still solid on the market and market has intention to continue move higher, we do not want to see deep retracement, particularly speaking. We do not want to see the erasing of this action to the upside, and we do not want to see the nasty black candles to the downside. So if you will see just one black candle right to this area, do not take the long position here. We would like to see gradual action, not some choppy action to the downside, not very fast. We do not want to see this sort of candles, but to the downside as usual. Well, that's our trading plan for the euro currency on the next week. Let's see what will happen on Monday.